Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Dubai International Airport's passenger traffic hit 32.6 million in the first half of the year, up 16.9% from 27.9 million in H1 last year, making it the busiest 6 months in the airport's history. That's according to the traffic report issued by Dubai Airports. According to the report, Dubai International handled a total of just over 5.5 million passengers in June, a growth of 17.5% from June last year. The top 5 country destinations in terms of passenger volumes were India, Saudi Arabia, the UK, Australia, and then Pakistan. Spurred by the launch of Qantas operations into Dubai in April, Australia tops the list in terms of percentage growth with a rise of 44.4%, followed by Saudi Arabia at 35%, the UK at 21.9%, and then India a rise of 21%. Meanwhile, aircraft movements in June totaled 30,191, up 10.1% from the same period in 2012, while year-to-date aircraft movements totaled 182,911, an increase of 7.4% compared to the first half of 2012. Air cargo volumes rose 10.2% to nearly 1.2 million tonnes during the period. Paul Griffiths, the CEO of Dubai Airports, was quoted as saying that the first half of the year has been very satisfying, with double-digit growth across all markets, boosted by the launch of 84 new services to 25 destinations. Emaar Properties has recorded a net profit of 1.231 billion dirhams for the first half of the year, just up from 1.2 billion recorded in H1 2012, while net profit for the second quarter stood at 675 million dirhams, 21% higher than the first quarter. According to a company statement, half-year 2013 revenues stood at 5.219 billion dirhams, 33% higher than H1 2012, while second quarter revenue came in at 3.109 billion, 47% higher than Q1. The hospitality and leisure and shopping malls and retail businesses of Emaar recorded total revenues of 2.326 billion dirhams, 45% of the total revenue, while the contribution of international operations to H1 revenue was 526 million dirhams, 10% of the total. The total sales value in Dubai of Emaar's real estate developments until the end of June stood at 6.3 billion dirhams, nearly 4 times the sales during the same period in 2012. The shopping malls and retail business of Emaar recorded total revenue of 1.555 billion dirhams during H1, a 20% rise from H1 last year, through the sustained growth of the Dubai Mall, which welcomed more than 38 million visitors in the first 6 months of the year, 23% higher than the same period last year. Meanwhile, the hospitality and leisure business contributed 771 million dirhams to Emaar's revenues during the first 6 months of the year, 7% higher than the same period last year, while the Address Hotels and Resorts recorded an average occupancy rate of 90% for H1. The construction industry's players in the UAE may expect to see more demand coming in from Saudi Arabia very soon. The Saudi government has announced that it will spend $22 billion on a metro system for its capital, Riyadh. During an interview, officials from a team known as BACS Consortium revealed some of the project's details. Led by Bechtel and comprised of Al Mabani, CCC and Siemens, the team was selected to design and build the estimated $10 billion Riyadh Metro Lines 1 and 2. The two lines will be a part of the 6-line metro system that will form the backbone of the city's public transport network. Dr. Amjad Bangash, the managing director of rail at Bechtel, says their newly established office in Dubai, which is now the centre of global engineering for them, will be providing significant support to the project. While it will be challenging to build the two lines in the busy city of Riyadh with an estimated 6 million population, they say there are many lessons learned from other cities, including Dubai and Hong Kong. Construction on the metro will begin early next year, with the trains running by 2019.
I think from a UAE standpoint, there's more than that. It's not just engineering. Down the road, subcontractors. It's not just us, as I mentioned. There's two other consortia in this mega project for Riyadh. We don't believe that all the suppliers and all the subcontractors will strictly come from Saudi Arabia and the other countries. I think you will find suppliers from UAE, both in terms of materials and construction and engineering.
The 5-year, multi-billion-dollar project is expected to create jobs across the region for Saudi nationals and other nationalities as well. According to Bechtel, their management team alone for the two lines already consists of 3,000 people, and more talent is needed in various areas. Given the massive scale of the project, many companies across the region and in the UAE will also benefit.
The two lines that we are going to build, one is the north-south line, and at the north end, not at the terminus, but closer to the north end, is the new King Abdullah Financial District, which is a major development. And it will also be served by a new, huge, iconic station. So that is a fairly big sort of a center for that metro line. It then continues to go south. The east-west line starts at the university on the west side, again intersects with the line 2, and then at that intersection close by, another consortium will be building a line that goes to the airport. So out of the 6 lines, the whole Riyadh is covered. We are building the two major north-south, east-west arteries.